Good evening. Welcome to Money Matters. I'm Charlie Shields of Wells Fargo Advisors, LLC. My co-host is Paul Mitchell of the Beneficial Bank. He's going to talk a little bit about what's going on with banks, whether there's loans happening and all that sort of thing. Our special guest is John McAdams, and John is the managing director of the Pioneer Business Ventures. And we're going to be talking to him about an exciting topic. He's got a lot of information about how people can build up their business and succeed, and most of the nation is made up of small businesses, not large ones, so it'll be a great show. Stick with us. Okay, Paul, let's get started here. I want to remind our viewers and listeners that they don't do any market timing on when to get a loan from you or when to buy a stock from me based on what we talk about here, because this is recorded.
Right.
We're not accountants, we're not lawyers. We're just going to try to give them the best advice we can, but then they should consult with their own expert before they make a move. Fair enough?
Fair enough. Sounds like a good plan, Charlie.
All right, good. Well, let's talk about bank loans
Sure.
and small businesses especially.
Yeah.
You seeing activity out there? Are things good?
Definitely pick it up, Charlie.
All right.
I work for a medium-sized bank, a large community bank with about $5 billion in assets. So it's not the smallest bank, and it's very far from being one of the largest banks. One of the things that is happening in this area, both banking and actually geographically, is continual mergers, combinations of banks, where a larger bank is buying one or two smaller banks. So it's consolidation in the industry. And there's a lot of talk about how that impacts small businesses.
Well, I thought the politicians were going to be taking all the big banks and turning them into smaller banks. What's going on here?
Well, the big banks are resisting that, so it's going to be a long process, I think, before that happens. And even if they become smaller, they become 1/100th of what they are, they'll still be a big bank. So
fair enough. Okay, well, I know that it's been tough for people to get loans in the past, and are the purse strings being loosened up? And speak to the level at your bank, and then whatever you know about larger banks, are they loosening up also?
Well, two aspects of it. One, interest rates remain low, so you can qualify for a larger loan if you pay less interest. So now it's still a good time, though there is started to be a little bit of an edge in interest rates increasing, and it'll probably continue in the next couple of years, but still they're at really historic lows. So that's one aspect. So it's a good time to borrow in terms of trying to lock in lower interest rates, whether it's your home mortgage or even a business loan. Secondly, banks it's a competitive industry. My bank is competing with other banks for a finite number of business companies that are looking for money. So we're extremely competitive, and that competition certainly has an impact in making some loans easier to get than they were a couple of years ago.
Sure. The joke used to be you can't get a loan unless you don't need it.
Right.
And hopefully that's improving, because small business is the lifeblood of the country.
Yeah.
And I guess we got an election coming up that's going to decide how much regulation will disappear.
Yeah.
And are you guys finding regulation is killing you?
Well, it certainly it has a big impact on restraining our activity, our ability to do things, and a cost of doing business. And we see it and hear it a lot from our customers.
Yeah, what I've heard is the large banks can afford, because of the economies of scale, can afford to hire all the bureaucrats to keep the other bureaucrats happy. And it's tougher for you guys because you can't really be hiring a ton of people to do all this
and the
work.
smaller bank is even worse. A very small bank that I've heard stories that had maybe one compliance officer 4 years ago, with a total cost of maybe $100,000 a year, now has 6.
Wow.
At a cost of $500,000.
Sure.
And what do they get for that? They have to make $400,000 more just to stay even.
Yeah.
Let alone the impact of just everything being regulated, and you have to watch what you're doing. It takes more time, more process. I get calls about if we decline a loan, for example, what kind of documentation you have to provide to support that you looked at it properly, that type of thing. You send out the proper kind of decline letter, etc. It takes my time too. I mean, I worked on it for a long time. We couldn't do the deal. We tried to. Sorry, but now we got to spend time on documenting after the fact. It's all over now.
Well, I'll have to remember to vote if I can figure out who's going to help the situation if they get elected.
Please do.
Okay. I know our viewers and listeners like to also get some information about the stock market.
Sure.
Have you got anything you want to ask me about?
Absolutely. Well, one of the big topics the last year or so has been energy, specifically price of oil. Also the gas exploration through fracking. On the one hand, so a lot of this fracking, this exploration, had led up to, I guess, decreased prices in oil.
Sure.
Now some of these energy companies are having problems even surviving because the energy costs have decreased so much. So how do you see that affecting?
Well, the cure for low prices is low prices, as we like to say, and the fact that there are low prices and some companies may have to go under unless oil turns around and goes up pretty quickly. And I want to remind our viewers and listeners not to time what oil's doing based on this show, but at the time we're talking, oil is pretty close to its low for the last 12 months, and it probably didn't belong way above $100, and it probably didn't belong way below 50, and I suspect over the next 2 or 3 years, because of bankruptcies or whatever other factors, that we'll see oil working its way higher from here. Now, it doesn't take a genius to predict that, because when you've seen a range between the high 20s and 150 over the last 7 or 8 years.
Pretty big spread.
Yeah, it's a pretty big spread, and odds are it'll go higher before it goes below the $25 area, but I'm not sure that that's correct.
Well, certainly as a layman, and I call myself a layman in terms of the investment industry, I don't recall anybody ever pretending to predict any of this movement in the oil or energy commodities.
Right. What happened was that with the shale oil in the United States and with factors like Iran starting to come back online and the Saudis needing a lot of revenues for a lot of different things they're doing, they're going at max production. And when the Saudis and other Arab countries saw that shale oil was going to be coming online, they're trying to allow prices to drop in order to drive some of these people out of business.
Yeah, sure.
And I think, I'm not an expert in the shale oil business, but I think shale oil is something where you can walk away from it and then come back a year later when you see prices going up and pretty much get started right away. It's not a huge entry barrier. So I'm not sure that the Saudi strategy is going to work over a long period of time. They're going to get tired of selling oil at a very low price when they could easily make an announcement and sell it $10 or $15 higher.
Well, I certainly like to see the U.S. being more independent in terms of its energy supplies for a variety of reasons.
Well, the first liquid natural gas ship left the United States to deliver oil overseas recently, so that's the first step.
Yep, yep. Other industries that are of interest to me, certainly, and this relates to banking again, commercial real estate, REITs. The banks do a lot of commercial real estate financing. Certainly my bank does, all different sizes.
Sure. Well, real estate investment trusts handle a lot of different kinds of real estate. The housing market itself, the commercial real estate market, is pretty complex, and in pockets of the country, I'm reading that prices are going sky high, like in New York or Los Angeles and Miami. And then other parts of the country, things are pretty flat. And Philadelphia area is probably a pretty good example. If you have a good project, you can make some money on it, from what I'm hearing from my friends in the corporate real estate market. The residential real estate market, Philadelphia seems to be pretty strong. And the burbs, not so much. Sideways, and of course location is one of the keys there. So I think it's mixed, and there's no guarantee we're going to have a bull market in real estate, but my guess would be that prices will work their way higher over the next 4 or 5 years.
Another issue in the investment community I've been reading about recently is closed-end funds. All new varieties of closed-end funds. Could you talk a little bit about how the closed-end fund industry kind of started, and I forget the term, these ones that are sort of specialized in certain areas. Yeah, well, niches.
Just like the stock market and bond market, you can have closed-end funds that specialize in international or emerging markets or fixed income.
Women, I heard women-owned companies, I heard is the latest one.
Well, there may be some of those. I'm not familiar with them, but that's possible. But closed-end funds have a limited amount of shares that they issue when they start. It's not like a mutual fund where you send in a request to put $10,000 in it, they add $10,000 to the total. And closed-end funds trade, and when emotions get worried, you can buy them under what's called net asset value. In other words, their intrinsic value might be $10 a share, and you might be able to buy it for $9.12 because of people being worried. And then in that particular sector, when people get braver, it might go above net asset value. But it really takes a lot of expertise to peel out a certain closed-end fund and know what's in it. So you have to trust the manager, do your homework and consult with your own advisor before you pick a certain closed-end fund.
Yeah.
But right now, I'm seeing areas like these closed-end funds that are managing convertible bonds.
Exchange traded, I think that's the term.
Exchange-traded funds
Yeah.
is something you can buy on the New York Stock Exchange, and it's just like a mutual fund, but you can buy it at the time that you make a decision to purchase it. And if you buy that mutual fund, if you see the market's up 50 points and you put a call in at 10 o'clock to buy a mutual fund, if the market's gone up to 300 points at the end of the day at 4 o'clock, that's what you're going to pay. Because mutual funds trade at 4 o'clock, and an exchange-traded...
Not good for traders,
Right, an exchange-traded fund can be purchased right on the spot, just like a stock.
Okay.
Okay.
Interesting.
Well, let's see. We have a viewer question to answer here.
Yeah.
Let's try to help Paul Jones, and he's got a question. He wants to know, what do we think about inflation? And Paul is from Philadelphia, and I think maybe both of us should take that because you get a feel as a bank whether you're starting to see inflation, and then I'll talk about the stock market side of it.
Sure. Well, there is some inflation, and a moderate amount of inflation is good for the economy. It's a reflection of the fact that the economy is growing. A lot of inflation, which we had a few decades ago, is terrible for the economy. It means things are getting out of hand. Prices to value don't make any sense, and the government's printing money, all kinds of uncertainties. But recently we've been talking about inflation in the 1 to 2% range, which is quite low. If you have no inflation, you may have deflation, which prices are going down, and that can be dangerous because that could lead to a depression.
Yeah.
So
why buy a house or a car this year if the price is going to be lower next year, right?
It's scary. It's scary. So a little bit of inflation is good. A little bit of inflation does sort of imply maybe is more explicitly creating a growth in interest rates. But interest rates, how low they've been the last few years at 2, 3, even 4%, historical lows. So don't be concerned if interest rates go to 5 or 6% for like a home mortgage or something like that, or a car loan, even a little more. It's a good thing that the economy is growing. Economy is growing. People are getting hired. That's really important.
Yeah.
That does create more money in the system, which leads to inflation. But overall, it's a good thing as long as it doesn't get out of hand.
I used to read in the history books about my grandparents having a mortgage that was below 5%, and I didn't understand what they were talking about. And then, of course, in the late 70s, they shot up to 16% mortgages. And then they've come down below 5, and now people, when rates go from a 3 3/4 mortgage to a 4 1/4, they say, "Oh, I missed it."
Yeah.
Well, they haven't missed it, have they?
No, not at all. Not at all. It's a wonderfully low rate.
Good.
So it's time to lock in if you can.
And from my perspective, watching stocks and bonds, just recently, and we were talking before the show started about what the unemployment rate is, and if the unemployment rate really is at 4.9%, then we should see some wage inflation coming into the program here fairly soon, and that's something to watch because the value of bonds can really get hurt if we start seeing some inflation come in. If we get a whiff of inflation, the market can react very quickly, and if you lock in a 2.5% 10-year government bond and rates go to 2.8,
market rates,
the value of your bond drops dramatically.
Because people go out and buy a 3% or 4% bond and not want to hold on to the 2.8%
right.
bond. Sure.
And the reason I mentioned 2.5 is right now the rates are below 2, and they probably belong at 2.5, but the government's been artificially holding rates down, trying to get the economy going. And so once that inflation creeps in, you could have a very sudden move in interest rates, so we need to be careful.
Sure. Well, let's give an example to the viewers in terms of what you mean by wage inflation. If people make more money, if they get a raise from $8 or an hour to $10 an hour or something like that, a company is paying them 20-25% more in wages.
Yeah.
Well, they can't absorb all that cost. It's going to have to be passed on to the consumer. That's wage inflation.
And they can get away with passing it on in an inflationary environment. It's been tough to pass that on the past couple of years.
Yeah.
So let's get on to our next part of the show. If you have a question, please send it in, and we're going to have a videotape to show you how to do that.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our hosts and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, dash matters, M-A-T-T-E-R-S, TV.com.
Okay, now we're going to have a really fun part of the show. John McAdam, thanks for being here today. How you doing?
Great, thanks for having me. It's good to be back.
Well, great. And I know that you help people to grow their businesses, and I know some of your focus is in small businesses. Tell me how you got interested in this and how you got started.
Well, I was a CEO for 10 years of a manufacturer of consumer products, and I'm a graduate of the Wharton School, so I went back to donate my time, and they chose me to help out with strategic business planning back in 2006. And I wrote a business plan rather than just sit in the class and TA. And I wrote it on mergers and acquisitions, and so I started an M&A practice.
Fascinating.
And got started that way rather than get another CEO gig.
Sure.
And I've been teaching the class ever since.
Now, is the class with Wharton, or is it Wharton?
It's the Wharton Small Business Development Center, so it is at Wharton, the Wharton School. It's adult ed at night, and they have some great educational programs. And you don't have to go through the Wharton admissions process to take a class there. It's subsidized by the government.
So somebody could just Google Wharton Small Business Development Center and get the information they need to
Yeah,
look at the
please sign up.
programs?
We get all kinds. I have,
Reasonable cost?
yeah, less than a few $100s.
Okay.
Rather than tens of thousands of dollars.
That's reasonable in my book.
So basically what you're trying to do is show people how they can build a living, breathing business plan. And I noticed in my research that you're willing to help people with suggestions, or they can hire you. So I guess the bottom line is, how do you help somebody to get rolling when they want to start a small business?
You mean inside the Wharton Small Business Development Center, or my book readers, or which?
Inside the center. Let's say that one of the students comes to you and says, "I've got this business idea," and you think, "Boy, this is good. And how am I going to do this?" And if
Sure.
let's say that he wants to use your services to help him get started.
Well, usually they would just take my strategic business planning class at Huntsman Hall. So, and usually the first thing that I do is protect them from themselves.
Yeah.
Because a lot of people have the big dream, the big idea. They've watched Kevin Costner's movie Build It and They Will Come.
Yeah.
And sometimes they don't come.
Yeah.
So I have to inform them of that and gently bring them out of the clouds down to earth and talk about. They usually think they need money. They usually think they need a loan. Sorry, guys. Or they need equity. And usually what they need is customers.
Yeah. I would agree with that too. That banks typically are not really in business to fund startup businesses. That a business that last year had zero revenues because you have no idea they have any ability to repay the loan.
Well, let's say that a student comes in there because he's on a roll and he knows his business is going to succeed, but he wants to make sure he does it smart. So he walks up to you and says, "Here's my business plan. The way I now have $5 million in revenues, and I want to get it to 10. What can you do to help that person?"
Good one. And probably about a third of the people that come through the program are established. And it depends what they want to do. Basically, the beauty of business planning is you can almost predict your future if you do it right, if you do it well, and put a lot of effort into it. Not that you need 12 steps for everything you do, but just a few. And you can really predict human behavior. You can really predict your costs. The tough part is predicting your unit sales, your gross profit. So what would I help them do? Keep their costs down, make sure they have a good go-to-market method. Guy in that situation is probably going to either be buying a company or launching new products. And it could be a minefield. So I try to help them through that.
Do you encourage business owners to share their business plan with key employees or with all employees? Is it important that everybody in the company knows what the business plan is and how you're trying to get from point A to point B?
Yeah, once you get over, say, $100,000 in revenue, and on that note, there's 28 million small businesses in the United States. 20 million of them are under 100,000 in revenue.
Wow.
8 million or above, and it gets smaller as you go up. So most of the businesses are small that come in, but to answer your question, the management team is critical. Research is pretty clear that when the management team writes the business plan, the venture is more successful, whether it's established or startup. Should you show it to all employees? Probably not. There's probably might be a diluted version. You probably don't want to talk about management compensation and stock.
Might have some confidentiality matters too, even.
Yeah, and it could. You really don't want it walking around.
For example, what do you intend to do with the business? Maybe you plan to sell it in 5 years, and maybe you don't want the employees to know that.
Yeah, if there's a layoff coming, there could be a mass exodus.
Yeah, well, it's probably kind of like when you get your 1099 to send to the IRS, there's part you send in and there's part that's background for your own information.
Exactly.
So you can probably separate that out.
Now, you actually, wrote a book on business plans, John? And if you did, why would anybody need another book on business plans?
Yeah, this is real exciting stuff. I can tell by the tone of your voice, but it's actually done quite well. Why would I wrote it to simplify a complex subject matter. People don't know what to write, and they can't get started writing. So I tried to make it a game out of it by just doing it 1 hour writing time. That's all you got to do.
No Monopoly games or
no,
Game of Life or anything. No?
Writing it, fun with numbers,
okay,
fun with words, fun with sales and marketing. How can you lose? And if you can make there's 5 parts, 10 minutes per part, 10 minutes to wrap up. That's the game.
An hour?
In an hour.
Wow.
I thought a business plan took weeks.
Some people do that. Well, business schools make it more complicated because they have a 17-week course they're putting you through.
Yeah.
I don't have that luxury. Yeah. For a $20 bill, I got to teach them how to start a business. So it's really a business plan foundation, not a complete plan. But write your plan foundation, take it to some customers, sell it. If it works, then write the complete business plan.
Yeah, I noticed in my research getting ready for the show, you suggest having an advisory board, and I would think that an advisory board would be more motivated if there's some reward for them at the end of the tunnel. So let's talk about someone who's got $400,000 in revenues and they're starting to realize they got something that's good, and they form up an advisory board. Would you suggest they set up some kind of stock option plan for the advisory board, or just pay them outright? Because cash is precious at that point.
Very, and the dollars have to convert to revenue. It can be. I think the key phrase is the fair value exchange. It can be cash or options, but options and equity tends to make it complicated.
Yeah,
it's like getting married on the first date. You really want to go a little slower. So a fair value exchange might be networking with other people that they could do business with, referrals, educational content, publicity. There's all kinds of forms of value other than money or options.
Okay.
John, one of the things that a lot of small businesses are working with these days is the difference between subcontractors and employees. Could you give us a little perspective on that? Subcontractors seems to be the way things like to go, but the IRS challenges a lot of companies, and the healthcare issues, and all this type of stuff.
It's great for small business people because a lot of solopreneurs, the one-man shops, those under 100,000, they're afraid to let go. So instead of hiring a full-time employee, they can de-risk the money. Basically, by having a subcontractor instead of an employee, and it's how many people scale.
Now, what should a small business person do to know that what they're doing is the way a subcontractor is supposed to be defined or treated? Talk to their attorney, talk to the IRS, talk to you. How do they really know that?
Yeah, it's more of a legal distinction that's evolving. So an employment attorney would know best.
I noticed also in the research that sometimes you suggest that small businesses use consultants, and sometimes they have employees. Could you talk about which is best when?
Whatever keeps your costs variable.
Yeah.
I think so. Anytime you can use a subcontractor or a consultant rather than an employee early in a venture, it's best because you can scale back if revenue scales back.
Yeah.
And you can scale up more quickly if revenue scales up more quickly. And you get that in businesses under $1 million. It's volatile.
Sure. But then if someone is going to maybe get a phone call next week or maybe not get a phone call, maybe it's tough to get that person really interested in
Right,
working with you.
that's the price to pay, right.
Yeah. So if you go the employee route, the big thing I hear about unbelievable medical costs, and if you got a really good employee, you want to try to keep that person. So how do you wrestle with that? How do you advise people to either pay the medical costs or give them a certain amount of cash and say, go get your own? What's the best way to work that?
How to advise people from rising benefit costs? Basically to utilize a specialist, an employee benefit specialist in insurance, independent of any company. Because when you get double-digit increases in employee benefits, competition can really be a great equalizer and help keep the cost down. Let the renewal term not be more than 2 years.
So maybe not just talk to your brother-in-law about what his advice is.
Right.
Right.
Because it's getting more complicated
Yeah.
because now the government's involved. Now,
Yeah.
that tends to simplify things, right?
Oh, yeah.
So, people trying to keep it under 50 employees. And the other thing I would say is increase the level of participation, monetary participation from the employees, or whatever the benefit is. If they value it, they'll participate.
Well, we warned you the show was going to go by pretty quick. We got maybe a minute and a half for you to leave some final thoughts of a viewer or listener out there thinking about coming and taking your course or starting up a small business. You know, the view from 30,000 feet. What would you tell them to do?
Plan something, damn it.
Yeah.
Probably talk to some customers first. They're the most important thing. Don't spend a lot of time preparing. Keep it simple. Find out who will buy your...
I like to talk to the customers. You can't start a business if you don't have any customers lined up. You can't start knocking on doors after you've opened up the business.
Right.
It's too late. It's too late. Certainly
There's too much pressure.
Yeah.
Yeah.
And it takes too long to get to the critical mass that you're anticipating, that you need.
Absolutely.
Yeah. John, how would a viewer find out more about what you do in your writings and your advice and some sample business plans, things like that?
Just go to my website, pioneerbusinessventures.com, or they could Google the Wharton Small Business Development Center.
That's good. Yeah, I like that small business, the Wharton Development Center. There are a bunch of development centers around the state, or
Yeah, I think there's 14,
okay.
and we probably run through about 1,000 clients a year, and it's low fee or free.
Well, we
Can't beat it.
appreciate you coming in today. The big event that needs to start happening in this country is more hiring from small businesses, and it looks like you're doing your part. And so hopefully our viewers and listeners will know how to get in touch with you if they want to take your course or maybe get some advice from you. And if they do ask for advice, are you allowed to charge them a fee for giving that advice?
Not at Wharton.
Not at Wharton.
I have a
Okay.
vow to poverty.
Okay. Great. Okay, well, thanks for doing the show with us. It's been a lot of fun. Next week, our special guest is going to be Ed Sullivan, the CEO of G2 Link, which is a conglomerate, and he'll have a really broad perspective. So we hope you'll tune in next week. As far as we're concerned, your money matters.